I'm Justin Hayek, investment advisor with PI Financial. Join me on a ride with today's top CEOs. Hear the stories of their greatest achievements and failures. Get the inside on their secrets to investing and the latest on their next big deal. This is Car Ride Confessions of a CEO. Joining me on today's ride is Danny Brody, Vice President, Investor Relations of the Green Organic Dutchman, symbol TGOD on the TSX. They recently closed on the biggest IPO in the cannabis sector to date, raising a record $132 million. So Danny, what would be the elevator pitch on the Green Organic Dutchman?
The elevator pitch on TGOD. Well, we are building the world's largest completely organic licensed producer. We're fully funded for 116,000 kilograms from raising $160 million privately. We've got a fantastic management team, groups that have proven themselves not only in the cannabis space, which is already tough to find because it's such a new industry, but also the consumer product space, the consumer packaged goods space, branding, marketing, international markets. Very well-rounded team, and we've got we put this company together about 2 years ago, and we've hopefully done something right, because we've, like I said, raised $160 million with over 4,000 retail shareholders, which was a feat in itself. I can go into that later. And we also attracted a $55 million investment from Aurora, which is immediate validation of our business plan, immediate validation of what we're doing, our team, what we've accomplished so far, and most importantly, the organic element. So
yeah, why was that? Maybe you can touch on that a little bit more. Why was that important? Why is that essentially part of the business plan or business model? Well,
being organic is, it's a lifestyle choice. And for that lifestyle, that people are willing to pay an extra premium price for that. So not only do we get on average a 26% premium, we also have much higher demand. I mean, the whole world is going organic, and we as a company see that trend coming over to cannabis as well.
Great point.
Only 3 LPs produce organic right now. Only 3.
Exclusively organic.
Exclusively organic, there's only 3. However, in a recent study by Hill and Knowlton, recreational and medicinal cannabis consumers, 60% prefer organic.
Oh, wow.
Yet only 5% of LPs produce organics.
So curious, how did the name, the Green Organic Dutchman, come about?
TGOD.
Yeah.
Well, it's started, the original founders were Dutch, so they obviously wanted to have Dutchman or Dutch in the name somehow. Okay. On the organic side, when we were naming the company, we didn't know that if it would be like the tobacco industry with plain packaging, or if it would be like the alcohol industry where you can have different branded products. Okay. So we wanted to make sure that one of our biggest differentiators, being organic, was going to be in the name. So we wanted to make sure that we had that set up. And then obviously green is for both cannabis, and our company, we've built it around being one of the most energy efficient, environmentally friendly companies. Who
are the partners that you guys have brought in or formed strategic partnerships with to help out in the whole operation and the build out of the facility?
That's a great question, and what I just want to point out a couple of things first. Part of our group, Dave Doherty, one of our directors, Brett Allen, one of our EVPs, worked with Organogram in 2014. Myself, Rob Anderson, our CEO now, and Dave Doherty, our same director, helped raise just under $50 million for Emblem in 2016. And through that process, we learned so much about the business. Yeah. So on the power side, we've come to we have a strategic partnership with Eaton Corp. Eaton's one of the largest power companies in the world. They've got 175 different countries that they're in, and they've come in to help us set up as energy efficient of an operation as possible. Eaton's the only reason we got into Quebec with the property that we did. They've helped come up with the partnership with the Hamilton Utility Corp, where they're building a 6 megawatt cogen natural gas power plant on our property in Ontario, because Ontario's got the most expensive power in Canada. We're building an actual power plant with Eaton, with Hamilton Utility Corp, to drop that cost of power down from about 13 cents to less than 5 cents per kilowatt hour.
Oh, wow.
So, it's almost a 260% savings. So again, it's all about de-risking certain aspects of the business. Eaton's really helping on the power front. Hamilton Utility Corp is helping. They're the actual municipality of Hamilton's utility company.
Okay.
And they're working with us to set this up. And then the other partner that we're working with is Ledcor. So, I mean, most people in Canada recognize the name Ledcor because they're the second largest construction management company in Canada. 7,000 employees. They're in every province. But again, they're experts in building. You know, they put up a Costco down the street from us in 82 days.
Wow.
So it just comes down to de-risking all aspects of the business. We're working with Thomas Larson to actually build out the facility and design it, and he was the engineer for it. Aurora bought Thomas Larson last year. They saw the value in what he was doing, and we ended up striking a partnership. Aurora came on board with us as a strategic partner, which led to a $55 million investment, an offtake agreement for 20% of our sales, and a fantastic partnership where we're able to work with Aurora Larson Projects, which is what it's called now, or ALPS for short. And they've just gone and built this 800,000 square foot facility in Edmonton, and they're coming to build that same facility for us now in Quebec. So again, just de-risking all aspects of the business, and that's why our partnerships are so important. So the interesting thing with the Aurora contract is they have the right to purchase 20% of our product at wholesale rates, and the only way that they can maintain that is if they maintain ownership above 10% in our company. So right now they own 17%, and they have the right to participate on a pro rata basis for every financing that we do. So for our IPO, for example, they bought another $20 million of our IPO, which maintains that 17% ownership level. So, you know, they've almost put $80 million into our company, which again completely validates what we're doing, completely validates that organic differentiator. And the next thing that companies are going to look for acquisition purposes are, I think, it's going to be some significant weight from a managerial standpoint towards the CPG industry, consumer packaged goods.
Yeah.
And like I said, cannabis is an ingredient. It's going to be packaged up and sold as in higher margin products as they go up that value chain all the way to the top, which is beverages. So having talent from the consumer packaged goods industry, guys, I mean, we've been hiring from that space for almost a year and a half now. But I think what we're starting to see now is a whole bunch of different companies are talking about how important packaged goods are, consumer products, and creating these massive brands. It's just huge for the industry. So I think companies that are going to be acquired will need to have that sort of expertise on the management side, not just on finance or cannabis itself, but specific from the consumer packaged goods space.
How big do you think the industry becomes?
So based off of this little crystal ball that we have in California and Colorado, we can bring those numbers and apply them up to what we're looking at. And that puts us at probably around, I think the number is 1.2 to 1.3 million kilograms. So we're looking at a 10 billion plus industry in Canada alone. There's just a report out the other day from ArcView talking about how the industry in the States is looking to be almost 50 billion within the next 10 years.
Wow.
So North America is $60 billion industry, and that's great and all, but Canada's great and all, but the international side of this is where the real blue sky is. And if you look at the companies that are trading at significant premiums to their funded capacity, the Auroras, the Afrias, the Canopies, they all have massive international plans.
You'd mentioned that you guys are aiming essentially to have TGOD become the largest producer of organic cannabis.
Correct.
But on a global scale, including the non-organic LPs, where would TGOD rank at full build-out?
Canopy, I believe, is the biggest. They're a bit quiet on their total funded capacity, but I believe it's around 400,000 to 500,000 kilograms. Aurora is now up to 430,000 kilograms. Then you've got Afria just over 200,000 kilograms. TGOD comes in at 116,000 kilograms.
Wow.
So fourth place in the space, and that's completely organic. I think we've done a really good job of de-risking on the capital market side. Every share we've ever issued as a private company is a 6-month hold from IPO date. How many other companies have you seen do that?
That was very unique in the way you guys structured the previous rounds of financing. The only free trading stock out the gate will be those shares issued in the IPO, correct?
Exactly.
Or were
it's
issued
only
in the IPO.
it's only the shares that we issued on the IPO. For us, it's about aligning management's vision with investor vision. And like I talked about earlier, having the ability to raise capital from so many retail investors with strict financing terms, like a 6-month hold, like no warrant, like a maximum investment of $10,000. No other company puts a maximum on any investment.
Yeah.
But for us, it allows us to raise money from people that really believe in what we're trying to do, really believe in our business plan. And because of that, you can attract long-term shareholders and also spread out your risk. So we don't have any one shareholder that could hurt us in the public markets. If one person wants to sell a whole bunch of shares, they can't, because nobody owns a whole whack of, a big chunk of shares, only management. All founding shares have a 42-month escrow from the IPO date. And all management shares are subject to at least a 6-month hold, and most of them are longer because they're management. They've got a standard 36-month or 42-month escrow attached to that. So we've really tried to, and every warrant that we've ever issued has a 12-month hold on it. So we've really tried to separate, or we've really tried to spread out the level of risk from one shareholder hurting the company. And then we've really tried to stretch out those free trade dates so no one financing can hurt the company.
You've been in the industry now for several years. When you first came into the industry, who were some of your mentors?
This is going to sound cheesy because he's our current CEO. It's Rob Anderson, but I mean, he really did take me in under his wing. I did all of his trading for him at Canaccord when I was there, and basically he's just trained me and worked with me on absolutely everything for the last 8 years. The majority of what I know and have learned in the space is all from Rob. He's got extremely high standards. He's no BS, and if I don't get the job done the way it's supposed to be done, I hear about it.
Right.
He's a tough boss, but it's because of that toughness that I've been able to sort of almost become who I am today.
Yeah, that's good. And we like to hear that you've got a CEO at the helm that's much like that too,
yeah,
right?
Totally.
Yeah.
And I'm not just saying that because he's going to watch this. I actually do mean it.
There you go. Danny, enjoyed it. Thanks, buddy.
Justin,
appreciate it.
thank you. Thank you as always.
Enjoyed it. Thanks, bud.
You bet.